What's up, traders? Andrew O'Connell here with Pristine Capital. Welcome to your market recap video. It is October 14th of 2022. Let's dive into these markets. Another tough, challenging day for the markets. S&P 500, it finished down 2.28%. Our NASDAQ QQQ was down 3.01%. Huge move. IWM small caps down 2.68%. Dogs of the Dow Jones down 1.24%. The ARK Innovation ETF, which I'm currently long, was down 5.69%. The TLT was down 0.83%. That's been one of the big issues with this market, that the dollar index has been very hot. It's been very tough to break that trend of dollar strength. And then bonds have just been very weak. And we're going to dive into the situation in the UK bond market, because I believe that was pretty much the sole driver behind all of this volatility. All these indices, they closed towards the low end of their day's range. Volatility, surprisingly, did contract in all these indices. So it's not like it was a big contraction. You can see the VIX was up a little bit. Volatility still is very high and very bid. But hey, we'll take it, right? In terms of breadth, we did have 13% advancers in the small caps. We had 12.2% of volume. And the trend model did flip from a +1 to a -1 reading. So I think this, you can have all these stories about like, oh yeah, this one individual stock, oh my gosh, it's selling off so much, like, whatever, this group of stocks, whatever it might be. But I really think this is the heart of the issue. We're going to be talking about this. It's going to be in economics textbooks, years from now. It's going to be the UK pension crisis. And we're having big issues there. Remember, we had the British pound flash crash, maybe like a week or two ago now. We had this crisis with the pension funds. They got levered up and they had to sell their bond positions. There were no buyers. So the bond yields started moving to the upside and there was no end in sight. So the Bank of England had to step in and they said, hey, we're going to give you guys until Friday. Offload everything you need to offload. We're going to buy it from you. And then once that's over, no more. And so this was the kicker. If you were watching the market from the pre-market, you probably noticed stocks are very bid, which is great. We're getting some continuation from yesterday. Bonds, those are bid too. Great. Or continuation from yesterday. But this UK bond market, I believe, was the canary in the coal mine this morning. Because you can see this was a post from this Twitter account. First time seeing it, at Past Pawn. And look at 7 o'clock. These are the UK gilt 30-year yields. You can see as of about 6 o'clock, 7 a.m., these were really tightening up, right? We got some news this morning's walk back of fiscal net spending plans in the UK. All right, that's a good thing, right? Then the bond yields started moving right out back to the upside. And I think that was the big problem, because I noticed in the morning, at right around the same time that these UK bond yields started moving to the upside, our US Treasury yields started moving to the upside as well. So I think for right now, you can ascribe like any sort of narrative. Yeah, the market's selling off on high inflation or, whatever it might be. Oh yeah, this Fed easing or Fed tightening, like, yeah, that's causing the market a lot of issues. I really think at this particular moment, this volatility that we're seeing in our US equities, our US bonds, the currency markets globally, I think it's being driven by this UK. So this really was the backdrop. But let's dive in. Let's assess the damage. In terms of the economic data, again, I think this data could have come out, in any which way. I think the UK situation was really driving the ship. But you can see the Michigan inflation expectations, they did come out a little bit higher than expected at 5.1%. And the previous reading was 4.7%. In terms of today's news, crazy stuff. The U.S. Treasury asking major banks if it should buy back U.S. government bonds. So imagine how odd that is. Like, the U.S. government is essentially borrowing money from investors when it issues debt, but then it's going to use that money to buy back the debt. So it's very odd. It's like very Ponzi-esque, but, whatever. So yeah, they're asking those primary dealers if that's something they should do. Do I think that would help some of this bond market volatility? I think it would, because we're pretty much finding, like, at these levels, there's really no bids for the bonds, so it is pretty problematic. VIX futures term structure became even further inverted today. Things were looking good into the close yesterday. These two front months were almost in tandem with each other. But again, I think with that UK incident, it really just caused mayhem with all these risk assets. Vinvis heat map. You can see a really big sell-off today, team. Tesla was down almost 8%. And again, do I think Tesla was selling off because investors are like looking at the fundamentals and they think they're bad and whatever? Probably not. I think it's just a stock that's widely owned. It's already been in a downtrend. Most investors are getting crushed this year, and it's just like, we need to sell. Like, there's no liquidity. There's this event going on. Like, just sell everything. And that's, you can see that reflected here. Even energy stocks, these got sold really hard as well. So in terms of sectors, that's pretty much what we saw, right? The ARK Innovation ETF was the worst performer. And energy was also, a very bad performer as well. Just weakness across the board. Best closing range was utilities and healthcare. Both still had really bad closing ranges, but those are the best. And then in terms of style factors, high beta was the underperformer for today. No common stock trades, no options trades for today for me. Let's take a look at these markets. So let's check out S&P 500. You can see we have this teal downward trend line that I drew in. And we tagged that downward trend line almost to a T in the morning. But then with that weakness, I believe in the UK bond market, everything just sort of came undone this morning. Now, the good news is that we got hotter than expected PPI on this candle right here, hotter than expected CPI right here. Then we got the hotter than expected Michigan inflation expectations as well as this UK debacle. And we are pretty much trading at the same levels as we were before any of these things happened. So it's been a very volatile 3 days, but the market essentially has gone nowhere. That said, honestly, I think technical analysis is like, other than like assessing like we're in a downtrend, we're in a really volatile sequence here, I think a lot just depends on what happens with UK next week. This week we got a ton of bad news. Do we get some good news next week, or is it more bad news? Like, I just think this market, with the VIX this elevated, for all we know, like, Monday could be a bullish engulfing candle of this bearish engulfing candle, or it could just be like, trip into the abyss. I feel like it's anyone's guess. But yeah, we do have, these lows. I do think these lows are going to be tough to penetrate from yesterday. Because, yeah, if we're having like a UK debt crisis, we can't even get near them. I do think this could be a pretty significant low. We'll have to see. It's like a page-turning novel. And let's take a look at how the weekly shaped up. Yeah, for the weekly, we're pretty much like right on that 200-week simple moving average. We've kind of been moving sideways for the last, 2-3 weeks, whatever it is. So yeah, and we'll talk about that more in our Pristine Capital weekend market analysis video. We'll go through all the weekly charts and really just do, high-level analysis of the market. NASDAQ. This one, similar deal, just a really rough go of it today. Russell 2000. Similar rough go. We tried to make it inside value. It looked like we were really running off to the races. And it's kind of crazy. We almost took out the highs from a couple weeks ago. But yeah, just caught dead in the tracks. Even the market on close imbalance today, it was $3 billion, which is huge. To have like a big sell-off almost all day and then get that market on close $3 billion at the end of the day, that's like a huge sign players were like getting out of the market today. Dow Jones, this thing actually looks pretty good compared to the other indices. But it was almost breaking above those prior highs and then just really got stopped in its tracks. See, it's kind of crazy. Like, day by day can really just change so much when the volatility is this darn high. And then if we look at the dollar index, again, this is problematic. Dollar index, we recouped all of the losses from yesterday. So there's, it's tough economic conditions over here. And then our bonds our bonds were doing great in the morning, and then again, once those UK bonds started moving, the yields started moving to the upside, the bonds started moving to the downside, our US markets really just followed suit. So we had a sell-off in the 10-year Treasury future, and we had a sell-off in the 30-year future as well. Now, one thing I'm looking forward to for next week, this was a really challenging, frustrating week for me. I'm not going to lie to you. I'm not going to sugarcoat it. But one thing that is good, this week has been all macro, right? Inflation data, oh my gosh, UK, oh my gosh. But now we're actually going to be in the heart of the earnings season. So what I think is good is, say for a company like Tesla that has just taken to the wood chipper, right? Just indiscriminate selling. I mean, look at this daily candle. This thing is crazy. I do think that this earnings catalyst, October 19th, I think when all you're getting is bad news and the market's just trending lower, catalysts are a good thing. I would say the exact opposite occurs. Like if the market's just going like up and up in a straight line, or like a stock is going up in a straight line, you introduce like an earnings report and suddenly the risk is very high, because almost any new information can't be better or worse than what the market is currently pricing in. So I think for a stock like Tesla, not saying it's going to just like rip back to the highs, but I really think like now the stock is pricing in a very bad earnings report. If the earnings, even if they are not really all that great, I think there's the potential for a turnaround. And I think that goes for a lot of stocks in the S&P 500. Right now, I'll leave you off on this. We've been in this sort of like sequence where the market's pricing in the worst of both worlds. It's kind of like, oh man, we got to sell these stocks because the earnings are going to be so bad. The economy's so bad. But then every time we get an economic data point, it comes in better than expected. And then the market goes, well, because the economy's better than expected, that means it's going to take longer for inflation to go away. So we need to sell everything. So it's like stocks are being sold because they're going to have bad earnings, but then also the economy's too good, so we got to sell them as well. So like I would imagine like both of those things aren't going to exist at the same time. It's going to be one or the other. If the economy's really bad, earnings are probably going to be really bad. If the economy's a little bit too good or too hot, the earnings aren't going to also just like be on the floor. So I think, yeah, this earnings season, I think can turn around a few companies. Because right now, like there's really not much in the way of relative strength. One name that we added yesterday looked pretty good today, was hanging in there. WWE actually finished out positive, which is good. And then I noticed this name, Bolero. This one also, very nice candle for a Bolero, but it's very few and far between these kinds of stocks. Most other stocks are just getting absolutely decimated. So yeah, I hope everyone has an awesome weekend. Hope you get some time away from the screens and just get to like decompress a little bit. I'm probably going to do that as well. Like I'm going to try to avoid, doing a whole lot on social media this week. Just kind of like detox a little bit. But yeah, just want to hit the ground running hard next week. As always, we're going to be putting out our weekend watch list video for Pristine Capital members, our weekend market analysis video for Pristine Capital members. So stay tuned for those. And we will see you all on Monday for another market recap. Have a good night, everyone.